Step 3. Classification. Definition. After recording transactions in the journal, similar transactions are grouped into separate accounts. This grouping is called classification. Simple meaning. Instead of keeping all transactions mixed together, accounting arranges them into categories. Let's discuss the same with some examples. Okay. Example CB Smart Mart. Paid salary of rupees 20,000 to an employee. Again, they paid salary of rupees 25,000 to another employee. Purchase furniture of rupees 50,000. Paid electricity bill of rupees 8,000. Purchase goods worth rupees 1,20,000. Again purchase goods worth rupees 80,000. Now what you need to do? So you need to group all these into accounts. Salary account, furniture account, electricity account, purchase account. Okay. So what's the importance? If you don't classify these into accounts, so what will happen? Without classification, information is confusing. With classification, transactions are grouped, easy to understand, saves time. That's why classification is very important. Let's take again a real-time example. Okay. In a school library, thousands of books are arranged by subject: science, mathematics, commerce, English, history. Now imagine if all these books were dumped in one pile without arrangement. Would you be able to find the book you need quickly? The answer is no. Just as books are grouped by subject, accounting groups transactions into accounts so that information can be retrieved easily. Okay. Step 4. Summarization. Definition. After classification, accounting prepares reports that summarize all the information. This is called summarization. So what are the main reports? Trial balance, trading accounts, profit and loss account, balance sheet are the main reports. How it will help? Let's take one example. CB Smart Mart has 3,500 sales entries. So there are two ways for the owner. One, to go each entry one by one. Is it possible for him to look after the profit and loss only by just selecting the entries? No. He always try to look to financial statements like balance sheet, profit and loss account to understand the performance of business. He will never go and check one entry by line by line. That's why summarization is important. Now again discuss why summarization is necessary. Imagine receiving a file with 20,000 journal entries. Could you easily tell whether the business made a profit? Answer is no. Now imagine receiving just two reports, profit and loss account and balance sheet. Within minutes, you can understand the business. So what's the learning? Summarization condenses thousands of entries into meaningful reports. Okay.